Let's welcome in the management of Capacit'e Infra. Mr. Rohit Katyal is joining us to discuss really the largest ever standalone order that they've got from CIDCO and also, of course, assessing those housing SOPs. Mr. Katyal, good morning. How has the company managed to navigate around the challenging environment in the sector, which has been compounded by the NBFC crisis?
So firstly, the company doesn't have any direct exposure to the NBFCs. And as such, the focus of the company has been on quality clients and even so more choosing the clients, taking repeat order from such clients who have not been impacted by the NBFC crisis. That's been the main focus of the company, which has helped the company navigate through this crisis. Also, the company has ensured that whichever clients did not pay, we were not hesitant in stopping the projects of such clients which you saw in Q3 and Q4 of last fiscal. That's been the mainstay of the company, and therefore we have been able to manage our cash flows without increasing any debt and been able to navigate through these challenging times.
Okay, and what's your sense of the market? Do you see a strong bid pipeline in the private sector? Is your company deliberately moving towards public projects?
So the private sector has seen a lot of consolidation, which you will agree, over the last 1 year, especially after the NBFC crisis. And clearly, our client base has been a clear beneficiary of such consolidation. And therefore, you have seen nearly a 50% increase in the order book which our company has from the private sector also. As far as the government sector is concerned, you see a lot of traction on the affordable segment and the healthcare. And therefore, it's always good to have a good balance in the order mix, which the company has achieved. Going forward, we intend to do no different. Client quality will be of paramount importance, whether from public or private space.
Sure. How significant will the most recent order from CIDCO be to your growth trajectory, say, over the next 12 to 24 months?
Obviously, this is the largest order on standalone basis which the company has bagged. Entails construction of 23,000 houses over a period of 42 months at a total value of about 4,502 crores. And therefore, the revenue will largely get benefited over the next 2 years due to receipt of this order. And therefore, we do believe that the growth trajectory of the company will be hugely benefited. Talking about the project, this obviously under is PMAY and is receiving grants from the central government as well as state governments. And therefore, it will add to increased revenue, maintained EBITDA levels and cash profits over the next 2.5 years. That's what you asked for.
Right. So are banks being supportive to the company, and is bank funding guarantee an issue or not an issue anymore?
So firstly, the banks have been supportive of good companies, and companies which have basically a low debt profile have been having a established execution track record, and this will benefit companies like us. Talking about the bank guarantees, we have established lines of credit, and we don't see any issue on that front at this moment in time. Our rating continues to be A, and we believe that the banks going forward will support companies like us, especially in priority sector like the affordable housing segment.
Under the IBA, how much extra commission will the company, how much commission do you think they will have to pay?
So the commissions continue to be same what it was in March. There is no increase on the bank guarantee commissions which we pay at the moment in time, and we believe that will continue because the rating hasn't undergone any change. There have been certain mandates coming or instructions coming from IBA or maybe RBI, but maybe that is not going to impact the already sanctioned limits which we have and the guarantees which we have now applied for.
How will the debt levels move due to enhanced working capital needs? What about overdue collections and advances for the CIDCO order? And can these really act as relief in the near term?
So as I already mentioned, our debt levels have not increased. They remain what it was, which means the debt equity is 0.1 or thereabouts, which does give a headroom for the company to raise debt for the short term if required for the CIDCO project or any new projects which may come by. That's one. As far as debtor collection is concerned, that's an ongoing continual process which will continue whether or not there is CIDCO project. The third point is mobilization advance. Well, as a policy, the company does not take up any projects which do not have mobilization advance terms, and as such, we are entitled to receive substantial mobilization advance from the project of CIDCO also, and that will be used for the working capital of the project. So all in all, we don't see any change in the policy or philosophy of the company as far as our working capital days are concerned. It should remain as in the past.
Okay. Now, the recent announcements by the FM on the housing sector, real estate, what are the overall implications? How are you assessing some of these moves?
We believe that the affordable housing segment has been given a huge fillip, and also projects not only in Mumbai or NCR but all over India, which are 60-70% complete, will receive the last mile funding, which is a very positive news. This means that projects which are stuck and of paramount importance to banks, financial institutions, including NBFCs, and require the last mile funding will receive that and see the light of the day. This is a very positive news as apart from the impetus given to the affordable housing segment. Since we are present in all these segments, we do believe that this will translate into better prospects as far as future business is concerned.
All right. Thanks so much for joining us then this morning, Mr. Katyal.